But still, that modest slowdown in China is expected to be a factor in the upcoming earnings season on Wall Street. Bob Pisani takes a look at what investors will be watching for.
Earnings season starts this week, and there's good news and there's potentially some bad news. Now, the good news is that the U.S. economy is improving, and companies with a strong U.S. focus are likely to report strong results. But that's only part of the picture. The largest companies, those in the S&P 500, only get about half of their revenues in the U.S. The other half comes from places like Europe, as well as China and Latin America. Now, the concern is that while the U.S. is recovering, Europe's growth is flat at best, and some countries like Italy are again seeing negative growth. In addition to weakness in Europe, there's also concerns about a softer Chinese economy. In the past, strength in China was enough to offset disappointment in Europe. That may not be the case this time. The World Bank today said China's growth is slowing and that GDP growth will be lower this year and next. That's why there's a lot of interest in Yum Brands. They report earnings tomorrow. The company gets 53% of its revenues from China, only 23% from the U.S. So the concern is that we could have a split earnings season. Good news for smaller companies with a U.S.-based focus, but more cautious commentary from those larger companies that have operations in Europe and in Asia. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.
Mike Thompson says corporate America could reveal that earnings rose by as much as 10% in the third quarter. Of course, Mike is head of research and advisory services at S&P Capital IQ, and he joins us tonight. Mike, welcome back.
Hi, Bill.
So another good quarter. I mean, the expectations we have to keep saying are start high and then they have to keep coming down, but you're looking for a pretty good quarter this time.
Oh, yeah. I think, it's funny, from October to the beginning of October to now, earnings are probably going to start moving up. But, if you look back 6 months, they were higher. They were probably just shy of 10%. So this is kind of the way the earnings expectation game is sort of played, and it cycles up. So I think you can probably expect something in 9 to 10% range when all is said and done if we have a good news scenario with earnings.
So, Mike, what's driving all that positiveness?
Well, in particular, there are three sectors that are going to lead this quarter. It's going to be the material sector, up 14%, telecoms up 11%, and healthcare. Healthcare is really becoming a solid contributor to the S&P earnings growth. They're going to be up in double digits as well. The consumer actually is having a kind of a little bit of a modest quarter, but it's such a big sector that anything 5-6% is additive. So you have a pretty good dynamic going on with the way these sectors are and the constituents work in the S&P 500. But generally what's at the core of this is that the economy is in a bit of a recovery, and that's a good news thing. And I'll underline that by talking about revenues. Revenue growth is going to come in around 4%, which after several years of really anemic top-line growth is a real breath of fresh air.
Yeah, revenues have been lagged, and companies have had to cut costs to keep that bottom line growing there at the same time. Alcoa, per tradition, starts the parade tomorrow by reporting earnings. They're not the bellwether that they used to be, but what can we learn from Alcoa's earnings for this earnings season?
It's really interesting, but I think Alcoa is actually well positioned. I think the numbers I saw is last year did 11 cents. I think the expectation is for them to do 22 cents this quarter. I think you'll see demand, strengthen their top line, and I think what you'll see is potentially improvement now, or at least beginnings of improvement, and maybe some positive comments perhaps out of their management team. Largely because commodities, the aggregate that goes into their finished good, there's some favorable currents there for them as commodities continue to go down in price.
You heard, Mike, our report from Bob Pisani talking about some of the themes, especially about China. I mean, what do you expect to hear from CEOs in the conference calls with analysts after the numbers come out about the quarter past, third quarter, and the current quarter looking ahead?
I think I don't think China is going to be a big problem in terms of what you're going to hear in terms of verbiage out of the CEOs from S&P 500 companies. I think you're going to have a lot of conversations and questions around a dollar that's improved in terms of price against other currencies, and I guess the threat of interest rates going up, right? But I think with China, in a lot of ways, the benefit is not always, with exceptions to certain companies, a lot of the benefit to the U.S. economy is actually as a producer an advantage, because what happens is their costs may actually be advantage in that if there's a softening, there'll be more competition amongst manufacturers for American companies to provide in their supply chain. So in effect, I'm not sure this is, it might be a problem for, as previously reported, Yum Brands and companies like that, which actually have a big top-line business. But I think generally it'll be a little bit more muted.
We will see. Mike, always good to see you. Thanks. Mike Thompson, the head of research and advisory services at S&P Capital IQ.